Well, good afternoon. Happy Thursday, January the 7th. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you today to talk about mortgage interest rates. What has happened this week? Because this has been a monumental week for mortgage interest rates. The most interesting week we've had really since the presidential election. And what this all stems from really is what happened Tuesday night here in the state of Georgia with the senatorial runoff. So we'll get to that in just a minute, but for perspective, let's go back to Monday, January the 4th, just Monday of this week, and talk about where we were, because where we were for mortgage interest rates was the very best levels in the history of the mortgage industry in this country. Let me show you what I'm talking about. When you take a look at mortgage-backed securities, here is January the 4th, and here's where we topped out, right? This is January the 4th, and these green lines, this escalation leading up to January the 4th, for perspective, if you zoom out to a 3-month look back or even a 6-month look back, is really right there at the very best levels we have seen. And the higher the value of the security, the lower the interest rates. That's why on Monday morning, when you woke up in this industry, you were able to offer some really aggressive financing terms for 30-year, 20-year, 10-year, 15-year fixed. What happened after that? Because we can see here on Tuesday, let me zoom back in, on Tuesday, Wednesday, and Thursday, a precipitous drop off in the value of these securities. So what changed in terms of data? Zero. Nothing changed in terms of the fundamental data. It's not like we've seen manufacturing skyrocket. It's not like we've seen a big spike in inflation. We haven't seen a bunch of jobs added to the economy. As a matter of fact, ADP issued an employment report yesterday that said the jobs actually contracted in December. An estimate of 88,000 jobs we thought were going to be created, and we actually lost 123,000 jobs. That kind of information would normally send bond prices higher, but it didn't matter because of what happened in Georgia on Tuesday night. What happened in Georgia on Tuesday night is the Democrats got control of the Senate and the House, right? We understand that now the Democrat Party holds the White House. It also will hold the Capitol building. It will hold Congress. And they'll be able to pass legislation with the vice president holding the tiebreaker. And your political leanings aside, what that means for the financial markets is a little bit of concern over the loss of checks and balances. Historically, Democrats have been big spenders. They tend to spend more money on government programs. They tend to raise taxes higher than the Republican Party. And there's a bit of concern in the financial markets on what that means, especially for the value of government securities. And mortgage-backed securities are just that. They're long-term bonds. So the concern, again, this isn't data-driven, this is emotion-driven. The concern is the way the government will afford all of these programs, the way the government will afford to do what they think they need to do to spur the economy is through the issuance of treasuries, through putting more treasuries on the market. And that additional supply will do one thing. It will have to drive up the rate the securities pay. It will drive down the value of the security, but the rate will go up. And that's the same thing as your mortgage interest rate. So what is there to do in light of this information? Well, the first thing is perspective here. It's not like interest rates have gone up to 3%, 4%, 5%. We're still in incredibly great levels. We may be an eighth of a point higher in rate. That's the smallest increment available, an eighth of a point higher in interest rate than what we started the week at. But it's important to note that really none of this is rooted in any hard data. It's really rooted more in emotion. And the weeks to come, as we get back to understanding, hey, we're still in the midst of a pretty terrible pandemic. We still have a lot of work to do in terms of getting the economy back on its feet, and the Fed has given zero indication of when they're going to stop buying up mortgage-backed securities. The hunch, the prevailing sentiment is perhaps that we're going to ease back a little bit on this reaction to what happened this week in the Senate election. As always, if you have any questions, please don't hesitate to reach out to me, mark.milam@highlandmtg.com, 404-395-1102. Thanks.